Hi there. HIMS and HERS, as you can see, has almost doubled year to date. The stock price is up 96%. And this is great. Do you know why? Because this company keeps growing, the revenue keeps going up. If you look at the last quarter, the revenue was up 52% year over year in Q2 2024. That's amazing. And they've also become profitable. They reported in the second quarter net income of over 13 million. Then another point about this company is that it's small, still small. The market cap, as you can see here, is around 4 billion, 4.1 billion. Of course, if you look at the price to earnings, it's over 252. This is quite a lot. But don't forget that the revenue is growing by over 50%. And also their subscribers and their earnings. So you have to look at its future to assess the outlook, the upside, and then you can find the fair value. But what I want to say is that as the market cap is around 4 billion, they still have room to grow a lot. Because let's look at the past, numbers, their past numbers, right here. You look at the revenue for the last 5 years. They start in 2019 when the revenue was about 82 million. Then it has increased to 872 million for 2023, last year. Now, they provided some guidance for 2024, and you can see that they expect the revenue to be around 1.4 billion for 2024. So you can see an increase from 872 million, as you can see here, to an increase of 1.4 billion. So they keep growing, and this is the most important thing. As I said, as the market cap is only 4 billion, the increase in the stock price can be even higher. Because when investors see such growth, they get in. As the market cap is small, the stock price keeps going up. Now in the short term, as you can see, after hours, the stock price is expected to go down 7%. Many things can happen. As you can see, in the last year, the stock price was around $8, then up 80%, down 30%, up 100%. That's why it's important to know when to buy. Don't want to buy when the stock price is at the highest peak, as it happened here, when the stock price was over $23. And then a massive decline of 85%. And back then, the stock price was $3.5. So if you had invested in May 20th, 2022, your return would have been over 400% so far. So it's quite important to look at the fundamentals and understand what's the fair value, what's the price you have to pay so that you can make a profit with this company. This is the most important thing, to pay a fair price. Because if you buy at the highest peak, here or here, you are likely to lose money in the short term. I mean in the next 3 to 5 years. So let's look at their fundamentals. Why this company is growing a lot? Why is that? First of all, they are small. If you look at their revenue, you can see that total revenue for the last quarter was about 315 million. As the market size of e-commerce, pharma e-commerce, is about 12 billion according to this research report, or this one, which is about 24 billion in 2024, they have a lot of room to grow. So the revenue will grow more in the future. There is no doubt. As long as they keep investing in marketing to attract new users to their platforms. Second thing you have to look, besides their growth in the revenue, is the number of subscribers. As you probably know, they offer a subscription service for their drugs they are selling via online. And as you can see, the number of subscribers year over year has increased by over 43%. This is a great growth rate. Over 43%, this is amazing. Now you also have to compare to the previous quarter, Q1 2024. So in Q2, they reported 1.8 million subscribers. And in Q1, they had 1.7 million. So they keep growing. This is a good sign. Then, the third important thing about this company is that, as I said at the beginning of this video, they've become profitable. If you look at the income statement, you can see here, net income for the second quarter was 13 million. It's not a huge amount, but compared to the last year, 2023, when they reported a loss of 7 million, this is a huge improvement. So, they have growth in their revenue, number of subscribers, and net income. So, as long as those three indicators keep going up, keep increasing, the stock price will go up in the long term. Of course, in the short term, many things can happen. The entire market can go down, or other bad things can happen. But in the long term, if you know when to buy, you will do quite well. So, besides these three indicators, you also have to look at the outlook of this industry, the online pharmacy in the United States. As you probably know, this is a US company. And if you look at the market size for online pharmacy, you can see that the revenue is expected to reach 24 billion in 2024, this year. And it is expected a compound annual growth rate of about 8 or close to 9% from 2024 to 2029. That's a lot, quite a lot. As HIMS announced that they expect for 2024 1.4 billion in revenue. So 1.4 billion. Pay close attention to this number, 1.4 billion. And you look at the entire market for online pharmacy in the US, you can see that the size is about 24 billion. Is expected to be about 24 billion. So the market share of HIMS is close to 6% at the moment. Based on these numbers, 24 billion in 2024. So 6% market share for HIMS. As the revenue for this online pharmacy is expected to grow by 9%, also the revenue for HIMS will grow by about the same or even more if they can double their market size from 5 or 6%, close to 6% to 10, 12%. That may also happen. What's important to know is that HIMS has an advantage over the retail pharmacy, the current pharmacy. Because as you probably know, HIMS operates online. They don't have physical locations. And that's a plus because they can save more money, invest in marketing to attract more subscribers, and offer lower prices in the long term. If you look at McKinsey, they report about online pharmacy. Let me show you here. Not here, but here. You can see that for the moment, retail chain pharmacy represents a huge part of the market for drugs, for delivering prescription drugs. And online pharmacy represents a small amount from the total prescriptions. As you can see, 0.6 billion, this means 600 million, and 2.9 or close to 3 billion for retail chains. Plus you add regional pharmacies, 1.5, and independent pharmacy. So the market size for online pharmacy is quite small. But in the long term, over the next 5 to 10 years, this number will increase even more. And so their revenue and earnings. The problem is, of course, the competition. You don't know who will be the winner. For the moment, HIMS, if you look at their income statement, you can see that they are investing a lot in marketing. As you can see here, their highest expenses are marketing. They made over 315 million in revenue, but their marketing expenses were around 145 million. So you have to be aware of that. There is no doubt that people will move from physical locations to online pharmacies. It's much more convenient and faster sometimes. Because if you have an emergency and you live not in a big city, then you will go to a retail store to buy your drugs. So they have room to grow, to increase the market size and also the market cap, the stock price. Now the problem is, when is the right time to invest in this company? Now, later, or who knows? That's why it's important to calculate the fair value of this company, assess the risk and the reward, and make your own decision if you want to invest in this company. So the next video is about the fair value of HIMS and HERS. When is the right time to take advantage of the stock price? By the way, that video is only available for members. It's premium content. So if you want to see that video, you can join this channel. And if you have other questions, please let me know in the comments.